This is Andy with Quality Stocks. Today's Wednesday, June 16th, 2010, and we're going to take a look at Cardium Therapeutics. This is an AMEX stock trading under the ticker CXM. I was requested to take a look at this, and I said that the chart I think is still definitely in play. And I got kind of a response, well, why is that? It's looking a little ugly. Well, let's look at a couple different things here. Very, very important for one. Just for starters, gap down, came back, filled the gap. Gap no longer in play. Just be aware of that. Nice base being held. It's a classic double bottom sort of positioning. Two, not great candles the last few days, that's for sure. But still holding that base. Overall, you look for things like this. MACD still trending towards zero. Histogram about ready to break through and go to the bullish side above zero. PPO also still trending towards zero. ADX, positive, negative DI, and the ADX all down relatively low. Plenty of room for this to make a move if it decides to. MFI is kind of twisted down a little bit after the last two down days, but still down low altogether. Plenty of room to turn and make a move. Not a big fan of this ADX or the accumulation distribution. You can see that even dating back to this area, it's been downtrending since there. We'd have liked to see a little bit stronger of a move through these 2 months. We'd like to see something stronger than what we just got right there. ADX or the accumulation distribution in a pretty nasty downtrend, not great there. And shaking money flow also not looking that good. You want to see this start to turn now and come back towards zero. CCI still holding above and oversold. Most people consider negative 100 when it's below that into oversold territory. Still holding above negative 100. Full stow still down around the bottom. Again, all these have plenty of room to move. Once again, the tricks, something I talk about for long-term reversals. If it makes this turn here, still trending towards zero. See a little bit. If you come back to here, you're going to see a little bit of maybe a triangle pattern, but you can also go back here even farther and call it an even more long-term trend towards zero. What's important about when you look at plays like this, real quick, the RSIs, having a tough time getting through 50. That's one thing you're going to look for. Inevitably, is this getting through 50? You want to stay above 50, get into bullish territory. See, historically, it's been having a tough time, even back through here, except for the one, this nice move, 44 to 72, significant gains. But we want to see it get back above 50. Very important. Most important, double bottom positioning. Very bottom at 43. If you scale this into short-term charts, you're going to see a lot of the wicks kind of disappear a little bit with short-term charts. You're going to see good support at 45 cents. So from 45 to 43, CXM has got great support over the last 3-4 months. A double bottom is generally considered within 10% of the lowest point. So you can see as 43 was the low point there, it's come down 44. Still a classic double bottom positioning. You see the short-term indicator or short-term moving averages are all getting curled right together right now, kind of as they did right through here before it made its move. The 50-day popped through, didn't hold. That's bearish. You want to see it hold that, coming back down through it. But still right there, right around 50, within challenging positioning of that without too great of a gain, about a 10% difference. And it'll move and challenge that 50-day moving average. Bollinger Bands are actually tightening back up a little bit. This chart is 100% in play until 43 falls. You can see a great double bottom and a classic move. Double bottoms a lot of times will come back and challenge the old high on its second move around. So obviously if you're going to go from 45 to 72, that's some great gains. More realistically, I would expect the first resistance to come in this 52 area, and a little bit more here right around 58. There was a support point there. It was still back in here, a little bit of support. Right here it became a resistance point when it couldn't hold it. Came back down. This is kind of evening star sort of pattern. Came back down, couldn't hold it. I think we're going to see some more significant resistance if this makes a move to the north side around 58 cents. Right now, hold 43. I don't care if it wants to trend this way for another 2 weeks. As long as it keeps holding that, it's still in play and make a move. We're looking for it to make a move to the north side Hopefully these indicators will continue to trend up. You start looking for trend lines following and weakness and a lot more selling coming in. You see volume still 1.1 million for a 46-cent stock. There's still plenty of liquidity to make an easy in and out on a trade. This is Andy from Quality Stocks taking a look at CXM.